Now my pleasure to welcome Gus for a shorter session, I believe, 30 minutes. Gus is a master black belt, and he's going to talk to us about applying BPM in an area that you may not have considered as yet, which is fraud management. Welcome.
Thank you. Good afternoon. Thank you for the opportunity to speak. I'll be sharing with you some information this afternoon about one of our showcase efforts in BPM at Capital One Bank. In fact, this is an example not only that talks about the asymmetric risk of fraud in a growing business, but it's also an example of leading with improvement in advance of automation. And so to further some of the discussion points from earlier conversations in the day, I'll encourage questions as we move through the materials. Before we begin, there is a little bit of background I'll provide briefly on Capital One. Over the last several years, we have become a diversified bank from a monoline credit card company. And the process we've been through of acquiring regional banking institutions is what led this example that I'll share with you today to be an improve first, automate later scenario, as we had much of our IT dollars and resources tied up in our system automation for these bank acquisitions. Today we have $127 billion in managed loans and over $115 billion in deposits on hand. We have three primary divisions in our national lending franchise: U.S. credit card, auto, and the UK Canada business. Separately, we also have a local banking franchise with presence in Louisiana, Texas, New York, New Jersey, Maryland, and Northern Virginia, and a total of 43 million customer accounts. I'll skip through the next several series of numbers and let's get into the case example. What I'll review with you today is not the list of Six Sigma projects that we undertook for this one business segment. What I'd like to highlight and focus on is the bone structure that we put in place for sustainable improvement on the back of automation and on the back of the business process management implementation. And we'll focus on our direct banking business segment for this. This business originally was born out of a CD portfolio that we purchased back in the late 90s. And it was a very small portfolio, somewhere around 30,000 accounts. We have grown that business and matured it into multiple product lines. We advertise across multiple channels, and today have over 800,000 customers in this business segment. You can see here the different ways that we acquire and service customers and the different ways that we make funds available to those customers. This business predated our acquisition of regional banks. It was our branchless deposit-taking franchise called Capital One Direct Banking. Again, in our original state, when we talk about the beginning of our BPM implementation for this business, the current state of the portfolio was about $14 billion. It has almost, and it may have actually just recently doubled in size over the last 5 years. Primarily, this began as an online channel for acquiring accounts, and today we have moved that into multiple marketing channels. We've also shifted the product mix. So I mentioned we started with a CD product base, and today we offer products that are much more transactional in nature, so DDA accounts, high-yield savings accounts, and money markets as examples. There are risks and challenges that came with these business changes that we wanted to make, including higher workload per account, larger complexity in managing demand and supply, and consistency and compliance for our marketing messages as we expanded into new channels. Our business leaders chose Six Sigma and lean methodologies. In fact, the head of the business at the time basically determined that we would use these methodologies to solve our business problems and expand our top-line growth. And we started by understanding voice of the customer requirements. So to the question earlier, one of the things that we focused on, and we'll share examples of here, is really doing a detailed understanding of what your customers are saying about what you're doing well and what you're not doing well. Evaluating the existing measurement systems that you have. Everyone has plenty of metrics. The question is, are you measuring the